Hey traders, Raghee here. Happy Friday, everybody. Welcome to Charts and got some coffee grok in here today. All right, welcome to Charts and Coffee. Wrapping up the week, taking a look at some sentiment and trend. It's been an interesting week. Certainly, this week's CPI has been a momentum needle mover. It was a bit of a game changer, I believe, for traders who are looking for a nice dip to take advantage of. Remember that in the Dow and in the S&P, not so much in the NASDAQ. And by the way, what was it? Wednesday into the close, we outlined a fairly detailed strategy on the Russell and the regional bank. So Wednesday into the close, we had a nice setup to take advantage of weakness in small caps and in regional banks. And, I still have that particular trade going on. I don't think macroeconomically, there's been a significant shift. The way that I look at my trading book right now, my book of trades in the ETF and stock option side of things over at the Sector Secrets Mastery, the way that I'm looking at my book of trades in the on the future side, things like coppers and corns and meats, everything is still working in terms of reflation. So I think it was a game changer in terms of the week. I do not think it was a game changer in terms of the longer term, more slow moving macroeconomic cycle that we are still in. All right. So having said that, that's sort of the sentiment that I'm going to embrace going into next week. In other words, if if it ain't broke, right? Okay, great to see everybody. Good morning. Good morning. All right, first question, James, how are you? James asks, I was interested in some more study material and was looking at the market. My market money math class. Sure. Should I grab one? Am I going to be going over market money math in the day trading class in June? So, James, no, and that class is towards the end of June. I believe it's don't hold me to it, 26th. 26th is when that class will be, but we'll have the webinars and clearly you guys will get the announcements before then. But market money math, in other words, the arithmetic around not only entries and exits, but position size, understanding risk, applying a little bit of a portfolio management mindset to a trading book. I don't see any harm in sort of morphing investing and trading type. Both have skill sets that do overlap a little bit. I think traders would do well to think of their book of trades as a portfolio and respecting macroeconomic tectonic plates. I think the patience that a great investor would have would be something a lot of traders could definitely benefit from. And on the flip side, I think a lot of the things that traders do, understanding some market timing, understanding cycles, understanding order flow, and getting a good fill and not excusing a bad fill because the time horizon's so long. I think a lot of investors could benefit from that, from different option strategies when investors should think more about maybe collecting credit as an options participant versus directional debit. So there's a lot both groups can learn from each other. And I think the cool thing is, we can morph them. So a lot of my market money math class comes from the way that I manage the five portfolios that I manage for my family and have since I was about 19 years old. Am I going to go over the risk management? Yes, but in Sector Secrets, we talk a lot about the market money math as part of really every trade. So James, you probably have a much better understanding of the longer term daily time frame approach that I use, and maybe you realize, but clearly the market money math class, one of my favorites. And if you want to take a little bit more of a deep dive, and really the backbone of that class was how did my husband position size his trades through actually what was a choppy period in 2019. I think it was late Q2, early Q3, or maybe it was late Q3, early Q4. I'm trying to remember when he did that. And how he position sized to, again, he was a newbie trader, to take a $10,000 account and run it up to 26,000 in 83 days. Again, new trader. Yeah, it's a neat. There's two little parallel stories in that class. So thanks for asking, James. All right, NQ exhaustion signal to the downside, upside for YM. And so what's the story with NQ? Nikolai, NQ is really a market that I'm not that interested in. If there is a part of the NQ that I am looking at, it's going to be specific to communications. But I am less and less interested in not just the NASDAQ as a whole, but a lot of the offshoots in terms of the individual heavily weighted sectors within it. So having said that, Dow is an easy one. Keep an eye on the Dow. I just Wednesday into the close in the futures and options room set up the Russell. So we set the Russell up on May 12 into the close, but we really set up IWM and more specifically KRE, which I've mentioned is going to be very likely the relative outperformer. So I really encourage folks to say, you know what, if you want to buy IWM, let's buy KRE instead. And I believe it's still a better play. But both of those were valid into the close Wednesday and really into the open early on Thursday. And both those trades are doing quite nice. So I'm very not interested. You know, I think as important as it is to have a watch list, it's probably even more important to have a do not watch list. And the NQ is flirting with making its way over to that column on my watch list. So thank you for asking. XLP outperformed XLY yesterday. Does that seem defensive? Yeah, it is. WR, it is. And by the way, one of the things that a lot of folks ask me about from time to time is about hedging. And you guys know I get a little salty when that topic comes up. So what I will say is, what we did in Sector Secrets is we put on a long position in XLP. And you know what? Let me give you a little bit more of a granular look at that. So rather than picking tops and strong markets, which I think is just really not a good call, I'll show you exactly what we did. We, on the 26th of April, so right about the time a lot of traders were thinking, you know, could the markets be ready for a potential rollover? Could we be getting toppy? Well, I think most traders start to short or buy puts on the markets that are that they believe are toppy. That's top picking, gang. You know, to me, top picking pretty much resonates mentally with me with nose picking. You don't want to do either one, right? Literally, and I don't mean to be funny. I'm being quite serious about that. So what do we do instead? To your point, and WR, great point, we start thinking defensively. And so what we did is on the 26th, we set up a June, and I'm reading this off the alert from Sector Secrets. We bought the June 1868 calls. So let me give you some context here. This was here. You see that? Right in there. That window. That's what we were looking at. See those down candles moving into the 21 exponential, which is usually aggressive. What's a reversion to the mean? The wave, right? That's why I put the 34 EMA on the high, the close, the low. So that reversion to the mean, look at how it hit the 21 and went past it, which is why I treat the 21 as aggressive and not really the sweet spot for a trend correction. In this context, the wave caught it and moved on. Now, when would a 13 or 21 be applicable? When a market's parabolic, you're going to find, you know, when it's exceeded the distance from the wave to price, when that chasm is 1.5 times the daily price movement range, 13 and 21 EMA zones will be very helpful to watch. However, once that's not the case and a more significant reversion, typically it's going to come back down to the wave. And then that's exactly what we did. So I agree with you. Not only do I agree with you, that's a position that I have on. All right. So thank you for the question. Can we take a look at Starbucks? All right. So let's go from a great winner to a place where I had to take some medicine. I love talking about losers. We learned so much from markets that stopped us out. Starbucks, if there was any kind of, how did they say, fly in the ointment, it was XLY. Starbucks is more tethered to the NASDAQ than perhaps a lot of traders realize or remember, XLY is heavily weighted within the NASDAQ. Starbucks is relatively heavily weighted within the XLY. So yeah, the weakness in tech is going to affect Starbucks. And so this is when I remind myself, this is why we have stops. And this is why I don't mind taking paper cuts in the market. I don't want to lose a finger. I don't mind a quick paper cut. And that's really ultimately what this was. I'm not interested in Starbucks anymore. In fact, I'm going to leave for the next round of entries that I'm looking for. So we've been very active and pretty successfully so the last 2 weeks. Yellen gave us a great gift last week, and CPI gave us a pretty good gift this week, although the CPI trough was a little bit more pronounced than Yellen's, as one would expect, because moving the needle on inflation the way that huge surprise was is going to be a little bit more significant than Yellen sort of making a statement that temporarily freaked the market out until she walked it back. So this was attached to XLY. XLY is attached to QQQ. And I'm going to leave those corners of the market alone for a little while. And mainly because we have so many other corners of the market, like that aforementioned XLP, that are so relatively outperforming. So I want to basically be ruthless with my non and underperformers, cut them loose, free up the mental and the literal capital, and then move on to where the macroeconomic environment is benefiting me most. So thanks for the question. All right, let's see. Hey there, Pamela. I watched your webinar on Peter's channel. So well, thank you. I really appreciate that. Look, I'm a big fan of Peter's work. He is an amazing market profile practitioner. And, you know, for me, embracing volume profile is sort of the sort of introduction step, the sort of the low few steps before you go into a full-blown market profile type approach. So it was a thrill to talk to folks that get that playing the market is way beyond just a price surface level understanding, and that you've got to dive below the surface to understand volume. And then, hopefully the discussion about time and volatility as a supplement, not supplanting, but supplementing price and volume was a cool one. I appreciate that. Thank you. And I definitely have a do not trade list. Adobe's at the top. Cool. Spend some time reminding yourself of markets that you do not want to trade as much as the markets you do want to trade. So, it always reminds me of, I forgot where I heard this, but that the Latin root of the word decide is desire, if I recall, and that means actually to cut away or cut off. So the process of deciding is really to eliminate certain things from contention. And I think that's a really great way to ultimately get to what you want to do. Eliminate things you don't want to do till you get to the thing that you do want to do. And so I think a lot of people, that's where the paralysis of analysis comes from, not using that decision cutting off type mindset and rather looking for more and more and more and more, or adding more and more until it feels like there's nothing to do because there's too much to do. But I'm with you. That do not watch list is a huge one. All right, MARA. So look, there's probably, and I'm probably going to tick some people off by saying this, but again, it's not personal. It just seems to be a fact. There is no better, probably a market sort of promoter than Elon Musk. Why am I bringing Elon Musk up when I talk about MARA? Look what happened to Bitcoin. There are certain voices in the market, and I will definitely count his as among them, that can move the market. That's a tremendous power. And yeah, is it, if you're a crypto fan, forget Doge. If you're a crypto fan, there are certain people you've got to listen up for opportunity. So a lot of folks asked me the other day, are you buying any Bitcoin? Yeah, I'm trading some Bitcoin right now. Absolutely. So when someone like an Elon Musk basically disses Bitcoin, for whatever reason, I could care less why. But when he does that, for all I know, he wants to buy some, not at 60,000, but closer to 45,000. I thought, thanks for the blue light special. So I'm trading it. For those of you that don't know, there's a micro Bitcoin futures contract that was just released, brand new, really pretty decent liquid open interest. And for futures traders, it's a fantastic way to trade Bitcoin. And I've got some skin in the game playing around with that small contract on that drop. So I think it's a neat opportunity now. So of course, when it comes to MARA and RIOT, these are certainly going to move in sympathy with them. So I did not go the Mara or the Riot route. I actually went straight the Bitcoin route with that new micro contract. And so I don't have any skin in the game here. I don't plan on it anytime soon. And one of the reasons for that is, and this was before, you can't actually, the volatility in Bitcoin was already starting before Elon said anything. So I'm by no means hanging it on him. In fact, in a weird way, sort of thanking him for what could be a nice trade. Mara and Riot went double red on their market structure. Riot did first, Mara just has, but this has not been a trending market since the 15th of April. So again, I'm not in any way saying these markets were strong and all of a sudden the comments drove them lower. Not at all. Not at all. It's just those comments hit an already vulnerable market. Bitcoin hasn't been in an uptrend since the 17th of April. So respect those overarching market trends and realize that a market that is not in an uptrend is far more susceptible to commentary like this. But isn't it interesting that we see this in that same 48 to 45,000 area right in here, which is what we bounced from before. I'm not looking for Bitcoin to make a new high on this trade of mine. I just would love it to retrace its steps and move up to the top of the range where it's sold off from. I kind of call it the scene of the crime level. I'd love to get up to about 57.5 and just retrace some of the steps of where we fell from. A great target to the upside would be about 50% of that sell-off candle. So I'm actually playing Bitcoin straight up on that one. Thanks for the question, John. Let's see, next up, and I kind of tackled both those questions. I see a lot of questions about Bitcoin. I'm long right now in a trade. And again, I took advantage of that candle and the new micro contract. All right. Okay. So, in terms of, any of the micro contracts, whether that be S&P, NAS, Dow, Russell, it's M. Usually just put an M in front of the symbol, and you've got the micro. So I think Bitcoin, this is the first trade that I made on it. MBT, I believe, MBT. All right. So that covers the Bitcoin questions and the Mara. And, other than maybe breaking through that low, this is, again, it's a trade, nice inside candles. I am looking for the market to resume higher for sure. Now, what's interesting is if you look at Doge in the wake of that, I think Doge went up, 15, 20% after that news. I don't have any Dogecoin exposure, by the way. All right. And then for those of you that have been asking about NFTs, most of those have been emails, and that Ethereum. Yeah, I think the NFT Ethereum is only going to continue to become more of a mainstream conversation. All right. Okay. Next up, PayPal. Sure. So again, start with market structure, move in, if you want to start with market structure, then move out to the sectors and the indices and find out whether or not this boat is in a tide that you want to trade. PayPal is not something, even at the very initial level of looking at it, do I want to do anything with? If we're looking at PayPal down near the 200 EMA, call it 225, 225 and a half, there's a psychological relevance to the 200 exponential moving average. And I will say that exponential, separate, but importantly, is overlapping with the last two lows. So if we get down to the 200 EMA, we're also going to be at a double Darvis support zone. If we're talking about PayPal down at that level, I'd love to see an oversold slow stochastic or an oversold ready aim fire, and I'll be in business. I would like to see it. I would like to see that market down there, and that would probably make sense for a lower risk, higher probability bounce level, because it is quite literally the floor. All right, gang. And just like that, Charts and Coffee is going to wrap up. Thanks as always for joining me this week. We'll be back on Monday with our new episode of Charts and Coffee. Maybe I'll be drinking some different coffee. I'm still rocking the, you know what I did today? I combined a little bit of the Barrel brand whiskey coffee with a little bit of Kona. I know that might be a little bit of heresy to the Kona Peaberry, but it made for a neat little coffee. So the book is looking good to kick off the morning. Markets are up. So we're going to basically probably sit back, get out of the market's way, and reassess what we have next week. Be good to each other, gang. I'll see you on Monday.